Hello friends, in this video we are going to discuss about the GST proposals as far as amendment proposed in the Finance Bill 2023 with respect to input tax credit are concerned. Three proposed amendment has been prescribed in the Finance Bill 2023. All these three proposal with respect to input tax credit is going to come into effect prospectively. So friends, first proposed amendment is under section 17, which provides for the apportionment and block credit. Subsection 5 of section 17 provides for the block credit, whereby various clauses has been prescribed and each of the clauses states for different type of goods or services in relation to different activities where it is to be considered as a block credit. One more clause has been proposed to be inserted, that is clause FA, whereby goods or services procured for providing CSR activity will be considered as a block credit, and accordingly company performing CSR activity, whatever goods or services they are procuring to perform that CSR activity, that is corporate social responsibility, will not be eligible as an input tax credit to the company. This will be an added cost to the company. Friends, this amendment will come into effect from the date to be notified after enactment of the finance bill. So therefore, the question arises, what is the position with respect to the credit which has already been taken by the company? And of course, it has been objected by the department where company is in the arguing for such matters. So friends, in this, we are still of the same view that company is eligible to take such credit. Why? Number one, it has been made obligatory on the company as per Companies Act. And when it is obligatory, it becomes for the company in the course of furtherance of business. And therefore, credit is eligible to the company. Number two, there are many decisions under the direct tax regime which states that CSR is nothing, but it enhances the brand image, goodwill of the company. And therefore, in a longer run, it enables the company to earn profit, which is the ultimate object of formation of the company. And therefore, it is in the course of furtherance of business and it is eligible as a credit to the company. Number three, reliance can also be placed on the erstwhile decision of the service tax in the case of Estel Propec, and another decision is also there in the case of Dwarikesh Sugar, whereby it has been held that Senvet credit is eligible to the company which has been used for providing the CSR activity. So, till the date of enactment of this provision, company is eligible to take that credit and matter is to be litigated with the department. Another question arises, what happens if company has incurred the expenses more than the prescribed limit of 2% and taken the credit? Friends, there also argument remains same and it is to be litigated with the department, whereby it is also in the course of furtherance of business and therefore credit is eligible to the company. Now we are coming on to the second amendment which has been proposed under the input tax credit. That is also under section 17, whereby subsection 3 of section 17 provides that where the credit is a common credit, only credit which is with respect to the taxable supply is eligible to the assessee, and therefore whatever is attributable to the exempted supply is to be reversed by the company as provided under Rule 42 and Rule 43. So for that computation, what is the value of supply, that is exempt supply, is to be considered has been expanded by addition of supply from the bonded warehouse to be considered as an exempt supply. Friends, supply from the bonded warehouse is an activity which is prescribed under Schedule 3, which is not to be considered as a supply. But for the purpose of computation of exempted supply, the value of those supply will be considered as an exempt supply. So in addition to other value which has been prescribed as on date, which is in relation to the where the tax has been payable under reverse charge mechanism, transactions on the securities, supply of sale of land, of course subject to the conditions where GST is payable prior to occupation certificate. So in addition to that, this value, wherever supply has been made from the bonded warehouse, will also be considered as an exempt supply. And by this amendment, value for the reversal of exempt supply under Rule 42 and 43 will get increased for the company. So this is the second amendment. And third amendment is under section 16, which provides for the eligibility and conditions for availment of the credit, whereby one of the condition is that taxpayer who has taken the credit has made the payment to the supplier within a period of 180 days. If the payment has not been made, as per the provision, it says that ITC shall be added to the output tax liability and interest is payable on that. However, this process of return filing was never got implemented, and therefore what currently also we are doing, that we are reversing the input tax credit and interest is payable on this. The same has been proposed to be amended in the Act as well, whereby it says that after the amendment, you need to reverse the input tax credit, interest is payable on this, and once you make the payment to that supplier, you can again take the credit of this. So these are the three amendments which has been provided under the input tax credit in the Finance Bill 2023. And these are the important amendments which, again I am repeating, will come into effect from the date to be notified after enactment of the Finance Bill. Thank you friends for being with us. Thank you so much.